All right, gang. Happy Tuesday to you. Welcome back to the Tier 1 Trading in New York live trading room session. Hope you guys had a great weekend. For those who I didn't see yesterday in the Q&A. By the way, great Q&A yesterday. If you didn't get a chance to watch it, the recording is up. Covered a handful of topics, including dealing with trading opportunities that have big wicks, so big spikes from news events, different ways to handle that. Talked about the back testing process and what steps to do when you're kind of in the middle of it. We talked about position sizing based off of the quality of trade, risking more on better opportunities. Talked about building a balanced portfolio and how the best performing pairs from a monetary perspective aren't necessarily the best pairs that you want to have in your trading portfolio. And then we talked about the basics of market movement, kind of went back to the basics of technical analysis, talked about Dow theory, Wyckoff cycles, Elliott waves, how they work kind of all in tune, and kind of what parts of those market cycles you should be looking for, what types of trading opportunities at. As you can see, we have some news out today. It's nowhere near as big of a news week as last week. Last week we had everything, right? We had FOMC statement. We had an interest rate hike here in the US. We had a Bank of England interest rate hike as well. We had non-farms on Friday. So we really got hammered, Wednesday, Thursday, Friday. I think ADP was Wednesday as well. So Wednesday, Thursday, Friday, we got hammered by news. This week, a little bit lighter. We do have GDP coming out for the pound on Friday morning. I believe we have a CPI number, which is going to be a big number coming out here in the States on Thursday. Nothing much tomorrow, but today is election day here on the other side of the pond, across the pond, as Orsi said, on the better side of the pond, some may say. And the answer is there anything we need to know or be concerned about? The answer is yes, right? So you always need to be concerned with elections. I actually want to read you a little bit of an excerpt from an article I read this morning that should kind of make things clear. Good morning, Dwayne. Hope all is well. Dwayne on YouTube says, looks like I'm feeling the effects of daylight savings time. Don't worry, I've been waking up an hour early ever since. So we turned the clocks back an hour. My clock, I'm one of those types where I don't have an alarm. My clock just adjusts to whatever it is. I've been waking up an hour early and getting tired an hour sooner. So I'm all messed up, and I typically won't get good until it's time to change the clocks back again. So I'll have one day of being normal, and I'll be back to being messed up again. But concerning the election, U.S. stock index futures edged higher. This is from Reuters, guys. U.S. stocks index futures edged higher on Tuesday ahead of a crucial midterm election that will determine control of Congress, with Republicans favored by polls to win control of the House of Representatives and possibly the Senate. With Democrat Joe Biden in the White House, that potential result would lead to a split in the government. Control of even one chamber of Congress would give Republicans the power to bring Biden's legislative agenda to a halt and demand deep spending cuts. The question for many is whether investors will respond positively to the deadlock in Washington, said Craig Earlham, senior market analyst of Lambda. On the one hand, the prospect of less spending could be viewed as aiding the inflation fight, but on the other, the economy could be headed for a recession, and inaction in government won't help. A surprise victory by the Democrats could throw the markets for a loop, potentially bring in the four concerns about tech sector regulations. We don't need to do all that spending, blah, 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 blah. Investors are also awaiting key inflation reading on Thursday. That's the CPI I told you about. So yes, the results of the election will have an impact. And again, what will that impact be? Well, who knows, right? That is the answer if you guys are new with news. It is, news events don't typically, the reaction of a news event isn't necessarily off of the number or the result. It's the interpretation of the result. So a lot of things or a lot of moving pieces here. Not just who's going to take control, Republicans or Democrats, or we'll see a split, and the result of that split. But it goes back to kind of the biggest gear in the cycle, which is interest rates, and what is the market moves, or what is the market's mood? Does the market feel that we are heading towards a recession? Does the market feel like we are not quite there, not quite at the mountain peak, as we talked about? We've been talking for a while now about this pivot point where we're getting, if you think of interest rate hikes kind of like climbing up a mountain, once we get to the peak, there's only one way to go, and that is down. Are we at that point yet? And based on how the market feels, right, the result of this election will have an effect on it. So, yes, I don't think we need to be concerned today as far as our trading. It is election day. I would expect no movement in the market, slow markets, because we're not going to see anything today because all the voting is happening today. But tomorrow, which is supposed to be a non-eventful fundamental day in the markets, that's when we may see some type of response based on what the market believes going forward. Because remember, right, the market doesn't move off of the present thing unless there is a deviation from the expectation, right? The market moves, right? Investors are smart. The market moves off of the future projections. So once the information is out there about who has won, who has control, the market will then assess that information. They're probably doing that right now. They're planning if this, then that, right? Same as we do in the charts. The market will see, okay, well, based on this result, here's what we predict going forward over the next few months, over the next year. And they'll start establishing a position in the market that way. And then we'll have Thursday with CPI come up, and that's either going to kind of confirm their thought or they may retract on that. And that's where things get a little bit funny. So expect slow markets today. But I wouldn't be surprised if we saw something tonight, tomorrow, when we're supposed to have slow markets, some big reactions. Orsi says, we are already in a recession in the UK. It's funny how we've gone. I mean, we always go from one to the other, but everything has been so, it's interesting not to get too much into the fundamental side because we're technical traders here. But it's funny because like we're everyone is so aggressive fighting inflation. So it's like we're running really, really, really fast in one direction to avoid this monster that is chasing us. And we're going so fast that we're just running into another monster. And then we're going to like turn around and run the other way really, really fast instead of like, and it's not, I mean, this is all stemming from COVID. These are reactions that they feel are necessary to take. But it's very interesting. There's not a lot of, I don't want to say there's not a lot of planning, but it's more not panic, but it's more reaction to put on a nice public face than doing what necessarily needs to be done. And again, it's not, we are in interesting situations. We never had a worldwide, a global pandemic like this before, or at least not in ages. So it takes drastic action. But I find it very interesting that we're just running from one thing. And then before you know it, there's going to be usually there's like a calming cycle where we get out of this and then we relax for a little bit. Then we're in a recession, then we relax a little bit. And it's a slow, gradual grind out of it to the next thing. We're going directly from one to the other, which will be interesting. Chris said, we have been in a recession since Biden's inaugural address. All right, so let's get on the chart here. Do I have trading view up on the one I want to show you? I do. Yes, good. I want to take a look at either Euro yen or pound yen. They're both, Tony made some money on pound yen this morning. They're both very similar. Let's go to pound yen. This one has a little bit more potential legs to it. You can see the cipher here played off nicely. I forgot who identified this last week, but well done. We did use this as an example of, if you guys remember last week's Q&A, or not 2 weeks ago Q&A, we were talking about cipher entries, and we had a trader who was experimenting with some different targets, some much more aggressive, or different stops, much more aggressive stops and whatnot. Here is a good example of, hey, if you use the traditional stop loss here, was this a winning or a losing pattern? And again, I'm not saying this to poo-poo the trader, but we always talk about a give and a take with trading. We got to understand that if we're going to do something, we're going to sacrifice something else. There's no kind of perfect scenario. You can't have your cake and eat it too, to use a weird reference, which I don't actually understand. Why can't you have your cake and eat it too? Like, what's the point of getting the cake if you're not going to eat it? You just collect it. But anyway, things that go through my mind. But you can see winning trade, right? We never violate the X leg. Price held down here. We consolidate it, right? We had some very nice candles, proof of bullish rejection. And then we ran back up for a nice pain-free win, to be honest with you. However, if you look at these two yellow lines, these are the more conservative, or I guess aggressive, you want to say, stop loss levels that one of our traders was experimenting with. Well, this is one of those cipher patterns that would have technically won, but you would have taken a loss on. Now, again, it's only one. You got to look at the entirety of the big picture, but always want to give an example of the give and takes. I don't want people going out there thinking like, hey, if I just change one thing, right, this is going to be the say all be all. This is going to be the magic elixir. You got to look at both sides, and you have to be aware of both sides when you're adding filters to any type of strategy, because filters, although can help you, they can also hurt you. And that's why we want to go through the testing process the correct way. We want to gather the data and then let those numbers speak for us instead of our emotions. Because I don't know about you guys. I don't know how many times I've added a filter and I've only paid attention to the time to filter one. And I'm like, oh man, this is amazing. And then I run the test and I'm like, oh man, this is crap. But anyway, consolidative markets here. Pound yen, Tony made some good money this morning. I'm interested in the level that we're currently at, right? You can see that price action has been in a bullish move. We came down, bearish, 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 bearish. Nice bullish doji candle right here, right? Coming right off of a high momentum bearish candle. So this long red candle right here, high momentum bearish, and then right into a bullish rejection, right? Candlestick green, ending bullish, obviously. Doesn't really matter. What's more important is the length of the wick to the downside, showing a rejection. We then have two bars that completely within the range of that, giving us some consolidation. We do have a higher high, higher close right here, spiking up. This is a bullish sign right here. And then we have a retest, right? A kind of an untraditional double bottom right here, where price action tests that level once again. We probe the lows, which is exactly what I want to see. And again, pretty much a symmetrical candle to the first one. We got another bullish rejection, followed by a higher high, higher close, and a run in a positive direction, right? Now, in that run to a positive direction, I'll get to the question on YouTube shortly, right? We have what I like to call a pregnant pause, right? Just a little consolidation right here in this run of 1, 2, 3, 4, 5, 6, 7, 8, 9 candles on the way up. We have one little pause right here in the sign of a doji, right? Now, do you notice anything stand out about this particular candle or location of the candle? If I want to give you guys a clue of this pregnant pause. And again, this pregnant pause is thought of, if you look at a lower time frame, like this could be like a flag pattern before market, little breath before the market pushes up. Same thing we talked about yesterday with the Elliott wave theory. Yeah, look left, right? No coincidence, right? That this pregnant pause comes at a level where we saw a previous pregnant pause in the opposite direction, right? This little green guy right here. So we've broken and closed above that. Now we're coming back down to that level. This is going to be a level of interest for us, where we can expect one of two things to happen, right? Either A, we are going to hold this level, right? This previous level of support, or this present level of support, hold this level and continue for another move higher, or retest of these highs and a potential extension. Or what's the other scenario? What else could happen here? Looking at both sides of the market, preparing ourselves for either occurrence. By the way, if you guys are watching on TradingView and or YouTube, do me a favor, hit that like button if you're here on a regular basis. Best way you can show me some love. If you're new, subscribe to the channel. That way you don't miss the next upload. Also, free trading workshop, November 14th, next week, free, online. Check it out, tier1trading.com. So yeah, we can either hold this level of structure, or we can end up forming, right, head and shoulders pattern, right? Maybe we get a little rejection, either head and shoulders or just break this line, doesn't really matter how it comes. And if we violate this level left, we're most likely going to travel down to somewhere in this area, right? Kind of the highs right here at about 167 even. Nice even handled number. So let's get that on there. Psychological number, close enough. Or the lowest level I would shoot for is right here, 166.56s with this move. So two potential trading opportunities here on the pound yen, excuse me. One, a bullish structure trade if we hold this level currently with a anticipation of a move back up to about 168.64s, 169 even if you're a little bit more aggressive, or a potential move down to 167 even or 166.50s. And again, this is something that can also be looked at on a lower time frame as well. After we cut off the live stream, we'll go down to a range bar chart and see if we can, we'll see how this expands from it. Actually, we can do that right now. Let me just send, there's a question on YouTube I got to get to. Let me just load up a range bar chart real quick to show you from a day trading perspective what this would look like. Let's go to a 13 range here on the pound yen. And then I promise I'll get to your question, George. Good seeing you here as always. Love having you join these things. Just give me a second. I'm gonna reload my data. We have to go to a range bar chart a little bit lower. I'm not getting the right data right here. Silly Ninja Trader. Give me a second. In the meantime, I'll get to the. Yeah, I'm gonna have to restart my Ninja Trader. My data's a little funky today, so I gotta redo that. But real quick, George says, "Good morning, Keel. I'd like to share with you some of my results since the last time we spoke, and I mentioned the break-even year. Turns out, the break-even year being 2022 turned profitable. That's what I love to hear. Patience. The last 2 months, still waiting for a year to finish and collect the rest of the data. Now I am currently testing 3 more years, as you suggested, and look forward to rejoining the platform to share the results. We look forward to having you back. We look forward to diving in those results, and we look forward to helping you take the next step in continuing your journey of becoming a profitable trader, consistently profitable trader. That's awesome news. That just made my day. Just made my day. All right, so 2 opportunities here on pound yen. Any questions before we move on to the next pair? Again, this is also something you can look at from a day trading perspective, right? No difference in the setup. Here's our line in the sand that matters. If we break this, a move to the downside, the downward move is more appealing to me personally than the upward move, just because of the level of structure and the clear level to shoot for. But if you have any questions, let me know. If not, YouTubers, trading viewers, I'm going to kick you out. Live rumors, we're going to go explore some other pairs. And as always, if there's one that stands out for you that you want me to hop to right away, let me know and we can bump that to the top of the list. Real quick, Vincent on TradingView. Hey, Keel, your dollar Swiss analysis was great. Thank you, Vincent. Usually people don't compliment me on the good analysis. They only yell at me on the bad ones, right? I put out a video this week in the Trading Edge video talking about we had a flag pattern on Bitcoin. Where I'm like, yeah, potential bullish breakout. I think we're going up to the next level. And then of course, right, in typical YouTube fashion, as soon as you put out a video, it does the exact opposite, right? Broke down to the downside. So I'm just, in the past, I don't get them much anymore, but in the past, this is where you would get all the negative comments where it's like, oh, how's it feel to lose and blah, 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 blah. And it's like, well, the reality of trading is like, here's the secret, guys. You're not going to be right all the time. You're not going to be right all the time. You may not even be right the majority of the time. But that's what, that you can tell the difference between a kind of a professional trading mindset and someone that is just there to be there, right? every single professional trader takes losses, right? Every single professional trader has predictions that don't go their way. The difference is, right? We know how to manage our positions, right? So even if we are losing, right? We know that we want to avoid the big losers. We want to avoid the big mistakes. We want to keep our losses small. We want to maximize our winning trades. And that is the game. The game is not about perfection. The game is about executing your trades and realizing the probabilities that your trading plan should present you with. So, all right, YouTube, I will see you guys tomorrow. Trading View, I will see you guys tomorrow. Again, if you haven't hit that like button, do it already. Share this, share the workshop as well. Live